Welcome to This Week in Money. I'm Jim Goddard. Today, CIBC Wood Gundy's Ross Clark takes a look at the action on the markets the past week. Entrepreneur and author Jim Rogers tells us China has been the economic story of the last 3 decades. What kind of advice would he give China to improve their growth? He also reflects on Trump's ability to change the face of the U.S. Fed when he appoints 6 new board members next year. And Danielle Park from the popular blog Juggling Dynamite comments on the Trudeau government's proposed tax hikes on small business. Plus, right after today's show, we'll feature company showcase updates from Aben's Jim Pettit, Cascadero's Bill McWilliam, and American Manganese CEO Larry Reaugh. We'll talk to Ross Clark right after this.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark. He's an investment advisor at CIBC Wood Gundy in Vancouver. Welcome back to This Week in Money, Ross.
Always good to be with you, Jim.
What did we see happen on the markets? A lot of trading or not?
Well, we had a pretty good run into the early part of the week. Then volatility started to diminish. We had the Fed come out with no rate increase, which clearly was exactly what was to be expected. They've also announced that they're going to be now cutting back on all that money that they had put into the systems back in 2009, all the mortgage-backed securities, etc. So no real surprises, but what we've ended up with here is we're sitting at the latter part of September now, second half, the end of what is usually one of the good seasonal runs. Quite often the first part of September can take you up, but as we get to the latter part of this month and into October, that's where we would normally look for the classic correction into the fall. And, you know, we've had all-time highs in the Dow and the S&P, but we've got the VIX right back down to single digits now, closing off at around 9.5% as of Friday's close. And when we take a look at the numbers behind the numbers, the commitment of traders, which shows us how the commercials and the speculators are participating in terms of the VIX itself. Are they buying options or put options? Are they buying call options? The fact is that the COT numbers right now are at the most extreme levels that we've seen in at least the last 5 years. So the probability here of a reversal and a correction is looking pretty good. And one of the one of the theories that I like to work with is the sequential system, which looks at the number of consecutive closes where you're up or down and then looks for potential reversals. Well, the sequential kicked in on the Dow and the S&P as of Thursday, the first third of the formula to trigger in. Now all we need is to see some downside follow through over the next few days, and then we can get into that maybe 7 to 10% style of correction, which would then provide the next really good buying opportunity as far as the equity markets are concerned.
Ross, I know a lot of people are concerned about the next correction in the market. Some have said 40, 60%, so you don't feel it's going to be that violent?
I don't see it as of this point. Actually, if you take a look at, we like to look at what's going on the interest rate side of things, the yield curve. There's nothing there that's really concerning. You're still seeing a flattening of the curve. If it was starting to roll over and show then a steepening, that would be of concern. If you take a look back to 2007 and 2000, we got to some inverted curves before it turned. But the key is that as long as those spreads on the yield curve are continuing to flatten, doesn't matter whether you've gone to right to zero or not. The key is when it reverses, and we haven't seen that. And if I take a look at the high yield versus, so that would be the JNK or the HYG ETFs, those are still holding up very well relative to government bonds like the TLTs. So there's what we would consider to be our canary in the coal mines in terms of warning signals. They're not there. So that implies, from my work, that the correction would just be a normal one. It would not be a dramatic one.
Gold, how's it doing? And my question is, why hasn't it skyrocketed with all this hydrogen bomb talk from North Korea?
Well, that's the whole point of this, isn't it? That when a market doesn't move the way you would anticipate based upon news, that's as important as it moving with the news. So a week and a half ago, we had gold trading nicely higher, big overbought signals in need of a correction. Commitment of traders numbers there were the highest that we had seen in a couple of years, and so it was due for a correction. By the middle of this week, we had come off nicely, started to get a little bit of an oversold reading, and then more talk of the North Korea and Americans once again back and forth with the bantering. So we've got a bit of a lift at the end of the week on gold, but normally with the commitment traders numbers like they are, we would expect to see a small bounce and then a movement to lower levels. You're probably looking at the better part of many, many weeks here before gold's ready to base out and have its next prolonged move up.
Oil's been able to hold out around the $50 mark, a bit higher than people expected. Will it continue?
Well, the backwardation says that things are tight on the front end, and that tends to be supportive to the market. We are coming up on shoulder season as we get to the end of this month, so if there's going to be a weak period, it would be right around the corner.
Ross, if anybody had investment questions for you, how can they get a hold of you?
My email address is ross.clark@cibc.ca.
Ross, thanks a lot for talking with us.
You're welcome, Jim.
My guest has been Ross Clark. He's an investment advisor at CIBC Wood Gundy in Vancouver. Coming up, Jim Rogers, next on This Week in Money.
Always consult your investment professional before making any investment decision.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineer gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Jim Rogers. He's known around the world for his investing and his books. His latest book is Street Smarts, Adventures on the Road and in the Markets. He's online at jimrogers.com. He's speaking to us from Singapore. Jim, welcome back to This Week in Money.
I'm delighted to be here. Good morning, good evening, whatever it is, wherever you are.
It's Saturday morning. The Dow and S&P 500 continue to make new highs. How long can this bull market continue?
Well, bull markets, just like bear markets, usually go on longer than anybody expects, including me. There's a lot of easy money around, everywhere in the world. So as far as I can see, it has a ways to go, and if something absurd happens, like a war, which I don't expect, so it could certainly go on several more weeks or even months.
Is timing that one of the big problems an investor has?
Well, I'm the world's worst timer, the world's worst market timer. I mean, short-term trading is impossible for me anyway. I would expect that sometime in the next few months will come to an end, and we'll have serious problems ahead of us. But no, who knows? Who knows? Maybe we should listen to your program every week.
Is the U.S. now following a weak dollar policy?
No, not in my view. And governments can have a short-term effect and short-term power, but in the long term, the market is much more important and much more powerful than any government.
Is the U.S. dollar likely to be the last world reserve currency?
Probably, yes, probably. As I see what's happening in the world, I know that the world certainly is looking for something to replace the U.S. dollar. Many countries do not like the fact that if you don't do what the U.S. says, they can come down hard on you. China and Russia and Brazil and others right now are trying to find a replacement for the U.S. dollar. So there will certainly be something that will come along to replace the dollar, and maybe we will not even have reserve currencies anymore in the future. I mean, the computer and the internet is very powerful, and who knows what will happen, but something probably will.
Gold and silver have been trading in a range for a while. Fundamentally, should gold and silver be much higher than they are right now?
I own gold and silver. I own lots of it, but I haven't bought any serious new positions for several years, since 2010 actually. I'm not buying any more, and I haven't for a while. If gold goes down a lot, which I expect, and my hope and my plan is that I will buy a lot more gold, a lot more silver, but in the meantime, I'm not doing anything.
The Federal Reserve is committing to reducing bond holdings by $10 billion to $50 billion a month. Is this a canary in the coal mine for the bond market and interest rates?
Well, the Fed has said that, and other central banks have suggested that they will do the same thing, that they will not do much more buying of bonds in the future. Now, who knows? I certainly don't know. That's going to have an effect, but what will happen, of course, is that when and if we start having problems again, the Fed is going to panic. The Fed is made up of bureaucrats and academics, and they will panic and they will try to do something to save the situation again, which will probably include printing more money or even buying more bonds.
What happens when debt bubbles in China and the U.S. unwind?
Well, in 2008, we had a serious problem because of too much debt. Now the debt worldwide is much higher. And so when the next problem comes, it's going to be much worse than in the past because the debt is so much higher now. And in 2008 and 9, when the world had a problem, China had a lot of money saved up for a rainy day, and when it started raining, they started spending the money and helped save the world. But now even China has debt. In some parts of China, there's a lot of debt. So the next time we have a problem worldwide, it's going to be much worse than anything we've seen in our lifetimes, because the debt is so very much higher now than it was then, including in China.
The chair of the Fed, Janet Yellen, has said we should not have a financial crisis in our lifetime. Just how long does she plan to live?
That's an extremely good point. So you probably should not listen to me if you believe Janet Yellen. I know that the world has had problems, financial and economic problems, for every few years since the beginning of time. Mrs. Yellen says, "Oh, that's finished now. Don't worry." I know she's wrong. Mrs. Yellen has the advantage that she's not going to be around much longer in her position anyway, and she can always say, "Well, you see, if you'd listened to me, if you kept me in the job, we wouldn't be having these problems now." No, I would suggest you're not listening to me. I would suggest you're not listening to any central banker if you want to be successful in the investment market.
Donald Trump is going to be able to appoint 6 members to the Fed board, the first time a president's been able to do that. Does that really mean anything?
Well, it could. I suspect that Mr. Trump will, and I have no idea, I don't know him, but I suspect he will appoint people who will do his bidding, and his bidding will be easy money and low interest rates. I said before that when problems come, the central bank is going to do everything it can to save us, and so we'll have a big rally. I suspect it could have an effect. Not a good effect for the world, but it will certainly have at least an effect on the markets for a while.
Mainland Chinese have been buying up real estate around the planet. China has placed a number of controls on currency leaving the country. What does that mean for the world real estate market?
Well, when you say the world's real estate market, well, it's a very big world. Get out of the world, you'll see. A gigantic world. I mean, Vancouver is one part of the world. Hong Kong's another, so when you say the world, some parts of the world have a bit of a real estate bubble right now, and it's not the government of China that's buying up the property, it's Chinese investors, Chinese individuals and companies, but that's going to continue, at least for a while, in some parts of the world because interest rates are so low. Currencies are very low for most of the world, so you're going to see people continue to buy property worldwide. Now, we're starting to have a bubble, at least a bit of a bubble in some parts of the world. But there are many parts of the world where property is very, very, very cheap. Find the places that it's cheap, and you'll probably be successful, even when property in Hong Kong collapses.
Do the Chinese have a different view on real estate? For example, in Hong Kong, they have 100-year mortgages.
Well, a different view. I have learned that throughout my investing career anyway, they were all the same. All people have the same views. We all put our trousers on one leg at a time. We all want to get rich very fast. We all want to find something that's never going to go down. And people will always say, especially in bull markets, that it's different this time. And all you have to do is buy property, for example, in Vancouver or wherever it is, Hong Kong, and you'll get rich. So I don't think the Chinese are not any different from the rest of us. It's just that they have the money at this point in history. But any time in history, you find the people who have got the money, and bubbles always develop, whether it's in property or stocks or something else.
If you were the top advisor to the president of China, what would you advise him to do?
Oh, well, the main thing the Chinese have done a lot of very good things in the last 35 years. That's why China's become the most successful country in the world in the last 30 years. So it's hard. I'm hard pressed to give the Chinese advice that they've done things so well for most of our lives. I would tell them to open the currency, open the markets. There are still exchange controls in China. There are controls on investing. I would get rid of those immediately. I mean, this is 2017. This is not 1917. So I would completely open the markets and the currencies and everything else right now if I were in China. I'm not Chinese. They're not going to listen to me.
We've heard 98% of Bitcoin transactions have involved China. China has subsequently banned new cryptocurrencies. Can Bitcoin and other cryptocurrencies survive going forward?
Well, the Chinese and other people are becoming worried about cryptocurrencies. Again, I'm not Chinese. I cannot tell them what to do, and even if I did, they wouldn't listen because they do things their own way. But the Chinese, for rightly or wrongly, see potential problems there. They're trying to calm the markets down or sort the markets out. In my view, they're probably doing the right thing because somebody needs to at least understand what's going on, and most investors in China have no clue what a Bitcoin is or any other cryptocurrency. But it's not just China. Many places I go, people say, "Oh, you should buy them," and I say, "Why?" They said, "Because they're going up." That's like the way my mother used to invest. If something goes up, she thinks you should buy it. It's not that simple.
Well, at one time baseball cards were going up and tulips were going up.
That's what I'm saying. You have throughout history, there are times when people will buy things because they're going up. That's not a good reason to buy anything just because it's going up. One needs to know a lot more than that, and even at times, even if there are things that are sound that are going up and people are rushing. I mean, once upon a time, people bought railroads because they were going up. Well, we still have railroads, and railroads are very important. Computers, once upon a time, people were buying computer stocks just because they were going up. Well, we still have computers. Most of those companies have disappeared, just like most of those railroads have disappeared. But you have to be a little more discerning than just buy something because it's going up.
Jim, thank you so much for chatting with us.
It's been delightful. I hope to see if I get to that too.
My guest has been Jim Rogers. He's available online at jimrogers.com. Coming up, Danielle Park, next on This Week in Money.
Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the U.S. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the U.S. and GET in Canada. Find out more at glancepay.com.
Lotus Ventures Inc. is a BC-based medical marijuana company poised to launch into the rapidly evolving cannabis sector. Lotus is in the final review stage of the Health Canada approvals to become a licensed producer, having arranged facility financing of up to $12 million, plus building permits for its prototype indoor production facility. Shares trade under the symbol J on the Canadian Securities Exchange. Visit our website at lotusventures.ca.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Danielle Park. She's the editor of the popular blog Juggling Dynamite and also president of Venable Park Investment Council Incorporated. Welcome back to the show, Danielle.
Thank you, Jim.
A lot of fuss is being made about the Trudeau government's proposed tax changes to small business. Are these changes as bad as the opposition is making them seem?
Well, I can see why a lot of people are upset, because they're tampering with the small business preference treatment that many professionals migrated to in the past number of years, where they were able to incorporate and they were able to do have some tax-advantaged income within that structure. So I can understand that, but I think that there is a problem with people paying above market rates to family through corporations, that the idea of sprinkling income. I've seen a lot of that in my analysis of various financial statements over the years, and I do think that it's rather indefensible. There's parts of I do agree that entrepreneurs create jobs, that small business needs to be supported, but I don't agree that we should have, unfair subsidies for any one sector, especially when we already have a remarkably low corporate tax rate in this country. So I think that there's, the reality is nobody wants to pay more. No one wants to cut spending. But nevertheless, we must, because we have a very challenging fiscal picture today. We've got the demographics of aging population. We've got flat wages. We've got reduced profitability. We've got less income from investments across the world and across Canada for sure, because of the QEs that have lowered yields to record levels. So we have a lot of trouble on the revenue side at the moment, and that's flowing through from taxpayers of all kinds to the government. Revenues are being hit. And especially if we have a slowdown in the real estate market continue, right, where a lot of the tax revenue has been driven in the past few years. So I can see we've got problems on the revenue side, and we've got escalating expenses. So there has to be some give and go there, because otherwise, you just keep adding debt. And we've done that. We're continuing to do that. We don't want to go back into, the amount of federal government debt that we saw in the 1990s when our credit rating was lowered. So we really do have to find a mix here. And of course, as I say, the problem with humans is none of us like to pay more, none of us like to get less, and yet we must somehow figure this out.
Under this proposed tax, they would also tax family and friends who invest in a small business at the maximum rate. Apparently, that's one of the best ways for a small business to start. Why would anybody want to invest in a small business if most of that money or a lot of that money is going to be taxed away?
Yeah. Well, again, people can get very concerned in theoretical applications. In reality, I think most people use their own savings and or debt to get companies started. And there's a lot of capital return that comes if your business is successful. Money is paid back tax-free because it was put in from other sources. So anyway, I'm really not, I'm not an accountant, and I know that on an individual basis, it sort of depends on various factors, but I do know they've really struck a nerve for sure because everyone's up in arms about it. So, I think at the end they'll probably negotiate something a little more muted than what they originally proposed.
Is it true small business is the biggest employer in Canada?
It's the biggest employer in the world, and this is something that I always get, frustrated with large corporations, the ones that have, billions and billions in revenue. They have they're given all the advantages when in fact they're actually not the dominant employer in the world. So, lots of municipalities or states or provinces will give them huge incentives, not to mention carte blanche, to water and natural resources, but just not paying their, regular share of taxes in the locale where they're setting up for a number of years in many cases because they're going to be these, quote, big job creators. But the reality is that's not where the bulk of the job creation comes from. And that's especially the case today where you have, multinational globalization and automation in the largest companies so that they're actually reducing their workforce over time. So I think we really have to reevaluate the idea that big business is always great for employment and jobs. That's clearly not the case.
And with robots becoming the way of the world, I know Trump said, I will get factories to come back to the U.S., but the ones I've heard about will employ only a handful of people. The rest will all be automated.
Mm-hmm. And General Motors announced some layoffs again this week. I think we're definitely going into, well, first of all, it doesn't take a genius to see that when you're at record employment and with an unemployment rate under 5% in the U.S., cyclically that's about as good as it ever gets, and then you start to transition higher. And Canada, the same thing. We've had not the best job growth in the last few years because it's primarily been in part-time and lower-paying positions, and we've lost a lot of the oil patch, the higher-paying jobs in the consolidation over the past few years. So I think that we should expect unemployment to go up from here because once it's at about this level, it just doesn't go lower. There's just a maximum amount of employment that the economy can push out. And that's especially the case today because corporate debt is back at a very high level. So not just households who are struggling, but corporations, they've been doing all sorts of financialization, buying back their own shares, taking on debt to increase leverage in a low growth environment. But now, they're shackled with a lot of debt. So I think we're going to go into another cost cutting phase here, unfortunately, which means probably an increase in unemployment again.
Will that be connected to a big downturn in the markets?
Well, typically, it's interesting with the U.S. Fed doing its magic show yesterday with the announcement of that they're going to start scaling back this mammoth $4.5 trillion balance sheet they have of assets, the QE spoils that they've accumulated since 2009. They finally are tiptoeing toward letting some of that money mature and not buy back and having a reversion in its balance sheet. So that's cute. Quantitative tapering has begun here, and every single time we've had when you get a big change in the direction of monetary policy, in this case towards quantitative tapering, they've already been hiking a little bit. The Bank of Canada's already been hiking for the past 18 months. When you get that, you typically, in 10 of the last 13 times that they've tried to walk back on liquidity, they've had a financial shock of some kind, which has precipitated a recession in the overall economy. So I find it quite interesting. Many people will say, the markets are at all-time highs, debt levels are at all-time highs, yields are at all-time lows, but we don't see any catalyst to bring on a bear market or downturn, because they look at the economy and say, you see, we don't see anything in the economy that's going to topple. The reality is that most of the downturns, when you're in this kind of a levered environment, they're actually triggered by a shock in the financial markets. So it's the opposite of what many people are expecting. So I think you could easily see a number of shocks that emanate from global financial markets. There's so many things going wrong right now all over the place, to do with abuse of credit and leverage and just, tiny fractional cash, stores. A euphoric sense among investors. Finally, ma and pa's capitulated and gone all in. People are cashing out any safe deposits that they had appropriately set aside. Once they realized the risk in their financial situation in the 2008 recession, many people began cashing out when prices had crashed and building up store of cash and trying to pay down some debt. That's now all fully reversed in the past sort of 6 months for sure. The last suckers rally, so to speak, since Trump came in, that final goose higher in markets really has managed to finally erode people's memory and concern about loss, and they've gone all in again. And when you see that kind of, euphoric, indiscriminate buying, everybody's doubling down on ETFs, thinking there's some benefit or safety in an ETF with a minimal fee. The reality is it does nothing to protect against systemic risk, because no one's done any math on looking at what the actual valuation of a company should be. They're not worrying about that. They're just buying these packets of things and saying, well, at least I'm only paying 0.1 or 0.2 as a fee inside, get me in kind of thing. Once you get that, that's the capitulation phase. Now, it's been a long time coming this time, and I'll grant the Feds and the central banks of the world, they have been remarkably effective in wearing people down over time and keeping it, they kept goosing the markets just long enough to keep people from, losing faith again. And they really suckered everybody back in. But now, as I say, we're in quantitative tapering, we're in tightening, and whenever you get that directional change, that liquidity starts to come out of that system. And when the liquidity comes out, that's when you typically get a buyer's evaporation of buyers, which we're actually seeing. The volume has been remarkably weak and coming off week after week in the last while. So there's very few participators, new buyers, let's say, available, because everybody's fully in that's going to buy. People with a value discipline who look for math and want to be discriminate about whether they're parting with their savings for a highly probable outcome of success, or whether they're just gambling. Those people are not attracted at these levels. I can say with confidence there's many people that control funds in the world that are just looking at this and saying, this is a mess, I'm not going near it, and they're just going to wait until better values present. So at this point, everybody's long and euphoric, highly indebted. Earnings are deteriorating. Even the buyback craze that supported the markets over the past few years, corporations, as I say, because they've had such huge surge in debt, are not able to keep buying back their shares at the pace that they were, and they've been the marginal buyer in this market. So you've got the QEs, slackening off a bit here. You've got buybacks weakening. So you're really running out of buyers, and that's what ultimately will tip the dynamics of the market. And when you get the sell-off begin, because there's so few people left on the short side, for example, you really just have a perfect setup for a cascading, shockingly fast cascading market to the downside. And that's when you typically get this shock to the economy, because it's just nonsensical what's been happening. So I think we're certainly due for a recession. We're now the second longest bull market that's ever happened in the history of the world. We've got the lowest income yields on these assets ever in thousands of years of human history. I mean, you really are it's hard to be hyperbolic enough, to describe the conditions at hand today. And so typically when the music stops, you're going to get a pretty shocking result, and I think this time won't be any different. I'm
Jim Goddard. We'll have more with Danielle Park next on This Week in Money.
I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario. With grab samples running as high as 32 grams per ton gold, a drill program will commence this spring to test the numerous targets located by recent groundwork. For more information, visit our website, rmroyalty.com.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN.AF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
I'm Larry Reaugh, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, AMY, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Reaugh, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. We're speaking with Danielle Park, editor of the popular blog Juggling Dynamite. She's also the president of Venable Park Investment Council, Incorporated. Danielle, Canada, according to a number of international organizations, is expected to have the top growth in the G7. Is that a good number, and is it anything to brag about?
Well, of course it's good, but let's not forget how we got this number, Jim. Therein lies the seeds of our own demise, right? How did we get the growth numbers that we've had, that everyone's been bragging about the past couple of quarters? Where did it come from? It came from real estate, right? Primarily overinvestment in real estate, and some rebound in the price of oil, but it's still, flirting with $50. So let's not get ahead of ourselves here. We're not talking about oil that's back up to 80. We're talking about oil that's barely 50. So there's been definitely a surge in the price of some energy companies in the past month. But we've seen this now repeatedly, a reflex spike and then only a fall off when they realize that, there's not a great surge in demand. In fact, the overall world is using less of the stuff. So that's not great for that sector of our economy in terms of revenue, plus the fact that the world's awash in supply of it. So then we go back to where's our revenue been coming from? It's been coming from speculation in real estate and misallocations of capital, a huge concentration in services related to real estate transactions. That's where the bulk of the government's funds have come from. And all at the same time that we now have, policy changes, provincially, trying to correct for some of the excesses and abuse that have been going on. At the margin, that's pushing down on some of the foreign investment that's been coming in. Secondly, you have this tweak higher in interest rates. The Bank of Canada moved higher in rates this month because they're concerned about this runaway debt machine that we've got going. So all of that is likely to curb our growth. So even the Bank of Canada, when they look into 2018, 2019, they don't see a continuing acceleration in growth. They're just responding to what they've seen in the past 6 months. So, unfortunately, as soon as they tighten, the first thing that happens, as soon as they increase rates out of concern for abuse of debt and highly leveraged economy, first thing that happens, of course, is the loonie responds, right? The loonie jumps higher in value, and that's exactly the opposite of what the Bank of Canada wants to see in terms of hoping for exports, to be an engine pulling this train. So Canada's really, yes, it's great that we've had a couple of above average quarters here, but no one's expecting that rate of growth to continue. And in fact, it's really ironic, or I don't know, there's many words that come to mind when I hear things like the Central Bank of the U.S. yesterday, Chair Yellen talking about how it's been a mystery to the U.S. Fed why the U.S. inflation rate was only 1.4 in June and July, and they keep this insane target of 2%, right? In the hopes, because the country is so indebted, because the world is so indebted, the theory is that if we can keep inflation going up and we can keep incomes rising with inflation, you're going to deflate away the weight of this debt. It'll become less expensive to service over time, and you'll be able to continue consuming because you'll have just a bit more growth in your income ahead of the debt that you're trying to repay. But unfortunately, because we've got to such a tipping point in the world, because we're in the midst of this insane experiment where they kept adding debt, we've now got bubble prices in every asset in the world. This is unprecedented. We've never had this, okay? We've had, in 2000 we had a tech bubble. We had, stocks that were certainly extremely overvalued, but real estate certainly was not. And government bonds were still yielding 5%. They were not priced, for, insanely overvalued. And then you get into the 2007 period, and you had this ridiculous high in U.S. housing. You had a overvaluation in stocks, but again, bonds were, paying about 5 and 6%. You could still have the bulk of your portfolio with a decent yield. You were still getting money, cash interest on your deposits up north of 2%. The world was still functioning. So you could have that implosion in the commodities market that was overdone there. Prices mean revert. You have the U.S. housing mean revert. Today, literally, there's nothing that has not been tainted and tarnished by this maniacal debt inflation period. So to have the U.S. Fed, the so-called banker to the world, where everyone parses every syllable of every sentence that comes out of that body of PhDs, the tragedy in all this is that they have just made this up as they went along, and they have no idea. They are completely blinded to the reality of the mess they've made. So they're sitting there, it's a mystery to us why, we aren't getting the inflation response. After adding trillions and trillions and trillions of dollars to the global financial system, we should be seeing all this rapicious, crazy consumption and huge gains in wages and demand and everything in the world. Well, no, we aren't, because people are, first of all, you're fighting the aging demographic, where people's propensity to consume goes down with age, and they just don't want to keep buying as much. That's the first thing. The second thing, you've got record debt levels all over the world pushing down on disposable income. And the third thing is you've got technology, which, as we've talked many times, wonderful, really great, awesome things happening in technology, but the effect of it is that it's pushing down on price, which technology also always has been deflationary, but now we're in this hyper-growth phase in our technological ability, which is making products and, direct access, things like Amazon, robots, like everything is making the price of things go down at the same time that you have wage deflation coming in from, all these companies that are making things in other countries where wages are much cheaper than here. So, it's not a mystery. It's not at all a mystery. It's frustrating that the people that are supposed to be, the geniuses at the helm of this are absolutely, mindless, absolutely unable to comprehend that they have been the main catalyst for the financial, problems that we have today, for the succession. This is the third financial bubble that we've seen in the last 20 years, and it's by far the worst, right? So I'm just finishing the book Fed Up, The Insider's Take on the Federal Reserve in America. It's written by someone who was actually at the Dallas Fed for 9 years and was at those meetings and was there when they were agonizing over whether we put a "the" there or should we move the. This is the Great Oz. These people are the Great Oz, and the whole media and everyone, gathers round to hear what they're going to, come forth with. And it's just nonsense. What we really need, and I was thinking of this, just in the past couple of days, what we really need is a Volcker-style shock to the system. So instead of all this placating and we won't do anything quickly and we promise you we'll telegraph the hell out of everything we're going to do and we'll give you lots of warning and we won't raise rates quickly, like all this placating and kowtowing has just made market monsters everywhere because you've got all these people insanely over-levered and risk-taking, indiscriminately wasting funds because they feel like they'll be bailed out and protected and, all that. But what you really need is a central banker with some actual guts who says, you know what, this system is a mess, just like Paul Volcker did when he had to break inflation, when it was going so fast, and the central bankers were all sort of tiptoeing around, not wanting to upset the markets. And he said, to hell with that, we have to actually break the back of this, and we have to do it with a sudden and dramatic change in policy, which will bring on a recession. We'll have to take our lumps because that's the only way we can get out of this inflationary spiral. Well, today we need another Volcker-style moment for the exact opposite reason. We're now in this deflationary spiral because of the weight of debt, because we've been, placating all these crazy people in markets and not letting the cream rise to the top. We've been funding everyone. So it's like when everyone's special, no one's special. That's the reality of what we've got in the world's, quote, investment markets today. So if we could have, a sudden break with policy where they shock the market and say, you know what, we're going to raise the policy rate because our pensions are going bankrupt, our savers are eating their savings to try and feed themselves. They're not able to live on the interest anymore from their deposits. So we get a major shift like that where they shock the market, then you could see that of course, yes, there'll be a recession, and yes, Canada will be hit because we've not saved for a rainy day. But I think that is the only way we get out of this, ultimately, because right now, the debt is just sitting there like a weight, and we must get to the write-down phase, the creative destruction phase, as a way out.
We're chatting with Danielle Park. Danielle, is it true oil companies are now being sued for climate change?
Yeah, sure. It makes perfect sense to me. It's the tobacco industry moment for the, oil producing companies. So, in the 1950s, the tobacco companies were sued. There's been some great movies made about it when they were able to establish the clear scientific nexus between, smoking and the horrible health effects that had. And then the revelation that the tobacco companies knew that for many years, but had not only hidden the evidence, but had actually done a counter information campaign where they disseminated false information and suppressed the truth about the harm of their product. So you think about, the reports that have come out confirming indeed that the oil companies have known since at least the 70s that they were pumping this, very devastating product, carbon and pollutants into the atmosphere, and that it was going to have very negative health effects for the population, very destabilizing for the world climate. So that's not open for debate. That's evident. It's been documented. There's actual, company material that confirms that this is all the case. And so this summer there was a finding by a court, or a peer-reviewed paper was written that suggested, okay, here's the way we can actually connect, because in lawsuits you can't just sue someone. You have to sue and prove there's a nexus between what they did and the damage that's incurred, right? There has to be, you prove there was a causal connection, and then you also have to prove what portion of the damages flow back to that action. So, when this paper came out, it said, hey, we can actually prove that, a certain portion of the damage was caused by these particular polluters. So, the 30% of the rise in global sea level between 1880 and 2010 resulted from emissions traced back to the 90 largest carbon producers, as one example. And then they can do a connection between the increase in global surface temperatures and how that's impacted the weather, the cost, the hurricanes. We're now getting a once in 500-year hurricane every other week, Jim. So there's going to be enormous cleanup, infrastructure, moving people out of harm's way, because we just can't keep rebuilding in floodplains where they're, flooding every other year. It's just financially unsustainable. So of course they're going to look for pockets. Governments are basically broke. These flood insurance programs that are underwritten by governments are racking up debt at a pace that was not forecast, because no one expected there to be, as I say, these 500-year floods every other year. So obviously now it's a question of where do we go for funds, and it's an obvious one that these municipalities, cities are now issuing claims against the world's major oil companies. And this week it was San Francisco and Oakland that issued 5 against the big 5 companies, and they're looking for them to pay billions of dollars to help fund the coastal infrastructure changes that need to happen now because of these rising sea levels. So, you can argue, people go on and argue about whether or not this is real. The reality is science is already here. It's already happening. We're already dealing with the catastrophic impacts and costs, both in health and in crazy weather. And so, yeah, it's going to be going after the profits, clawing them back, and trying to, adapt to this new world we've made.
A poll found 4 in 10 Canadians believe science is a matter of opinion. Do you find that concerning?
I think any scientist would find that concerning. I think any rational person would find that concerning. It's this whole preoccupation with, that you're entitled to your own facts. And I think this is really stemming from probably the proliferation of information over the internet. Never before has there been so many tenuous or spurious information sites where people can just, find whatever they want written and use it as a basis for their belief. So yeah, it's a troubling development. On the other hand, never before have we had such ability to disseminate useful information to people as well, and to figure out what we can do in tangible steps to confront the problem, admit, repent, reform, and recover. That's the steps, and we really do need to get on with it here.
Danielle, thank you so much for chatting with us.
Thank you, Jim.
My guest has been Danielle Park, editor of the popular blog Juggling Dynamite, her podcast, Not So Common Sense. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Jim Rogers, and Danielle Park. And thank you for listening. If you have any questions for the show, you can email us at info@howstreet.com. And coming up right after the show, we'll have company showcase updates with Aben's Jim Pettit, Cascadero's Bill McWilliam, and American Manganese CEO Larry Reaugh. If you have any questions for the show, you can email us at info@howstreet.com. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HoweStreet.com.
I'm your host, Jim Goddard. We're speaking with Jim Pettit. He's the CEO and president of Aben Resources. Welcome back to the show, Jim.
Thanks, Jim.
What is new around Aben?
Well, other than a tremendous mining show last week, there's not a whole lot new to report. We're still waiting on assays. We're starting to get dribs and drabs in, but we need complete holes before we announce anything, and that's coming. I think, sooner than later. The show was really well attended last year. It was the Letter Writers Group, the Metals Investment Show, and very enthusiastic. I think you saw that bump in everyone's stock prices involved up there, and then now that it's over, they're settling down again. But it was a really good show, and there was some really good presentations there.
Why were people so enthusiastic at the metal show?
Well, it's put on by letter writers. It's an invite-only type of show, And there was a lot of good, really good stories to be told. And in particular, there was 3 companies from the Golden Triangle. There was GT Gold, there was Colorado, and us. And there was a real buzz. And I guess that was sort of brought on by GT Gold and their move they've made. And they come out with another round of results that are good. Generally speaking, the market liked them, and then, within a day or so, they started selling off anyways. Their market cap is very high. They set the bar high, and, the talks that were given were very good.
Where is the Golden Triangle, and why is it called the Golden Triangle?
Well, the Golden Triangle is in the northwest quadrant of British Columbia. It's an area that is the home to some incredibly high-grade past producers, incredibly high-grade current producers, and hopefully some incredibly high-grade future producers. There's a lot of exploration going on up there. It's starting to wind down, but, it's still going on. Probably got another 2 to 3 weeks of good drilling season up there, but it does close in fast. But there are a lot of companies up there working. There's, anywhere from down as far south towards Stewart, heading down towards the old Premier Mine and Grand Duke. You've got the IDM, and then moving on up, you've got us, you got SNP, you got SK Mining, MTS, GGI, and then further to the north, you've got some new companies, Jax and GTT. Or GGT. Okay.
Jim, is it going to help companies like yours that the federal government is going to drop $250, $300 million in road improvements in the Yukon?
It will. We do have a property up there called the Justin. It's totally adjacent to, tied on to Golden Predator where they're drilling. Yeah, it will. It's on the Nahanni Range Road. That's going to be a big improvement because they always, you're always facing washouts, bridges, wooden bridges, that sort of thing. And it is an important road up into that region, goes all the way up to the Cantong mine, and that's the hauling road. So whatever they can do there, that's going to make it easier to get in and out. That's just part of it. That would be the beginning. That's how they started with the improvements in the Golden Triangle with the road. It used to be gravel road, part of the Alaska Highway, basically, and it's all paved. It's beautiful, and now you've got some really good other infrastructure, including power. So one day up there, I'm sure in the Yukon they'll have power.
What about the new technology that we have for minerals exploration, things like ground-penetrating radar? How does that help your industry?
Well, that sort of thing is being used up there in the Golden Triangle. I know there's a company that is using a system that it's a probe, goes downhole, and it helps to guide the drilling program. Could possibly reduce costs while you're up there. If you got a company that's drilling a lot of holes and trying to stay within a zone, then this is a good way to do it. It gives you an indication, and especially if you're using RC drilling, which also reduces costs. Then you can drop this downhole and get an image of the sidewalls looking outwards rather than pulling the core out and looking at what you've got. And it also has acoustic capabilities that give like a pulse outwards, and it gives you a feedback as to what kind of, every type of rock has a different time response. So it allows you to get a better impression of whether you're still in the zone or, how thick is the zone, that sort of thing. There's a great use of proceeds because it will bring the cost down.
Jim, can you tell us a bit about Aben Resources?
Yeah. Well, Aben's symbol is ABN. The OTC is ABN.AF, and Frankfurt's E2L2. We've got 52.9 million shares out. Fully diluted is 81.8. Stock's trading currently at 39 cents, up from a few weeks back at 10. It's had a good run. We are currently, I just put a news release out that we have completed 9 holes to this point, and just under 2,500 meters. We're in a good zone of mineralization that we didn't know about before, but it corresponds with surface gold and copper soil anomalies, very, very bold soil anomalies, and rock sample anomalies too. So it's a zone that we really wanted to find out if there is an extension, to the old historic high-grade hole that was basically 11 meters of 33 grams, and I think it's pretty safe to say that there is a zone there that is mineralized. We like the size of it. It's going to require a lot more drilling, but that will be determined once we get our assays in and we can really take a good hard look at the mineralization and what it looks as we move north and south.
How can people find out more information about Aben?
Well, people can go to the website, which is www.abenresources.com. They can email info@abenresources, or they can call direct to Don Myers, who's the Director of Investor Relations, at 604-687-3119, or even toll-free 1-800-567-8181.
Jim, thanks for the update.
You bet. Thanks.
We've been speaking with Jim Pettit, CEO and President of Aben Resources. Our conversation took place on September 20th. I'm Jim Goddard.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated. Welcome to Company Showcase, an advertising feature on HowStreet.com.
I'm Jim Goddard. We're speaking with Bill McWilliam. He's the chairman of Cascadero. Welcome back to the show, Bill.
Thank you, Jim.
You have some pretty good news or some interesting news about Terron. Can you tell us about it, and what is a Terron to start with?
Sure. A Terron is a beautiful little purple flower that grows at about 4,500 meters in the Argentine Puna, and it's the property is actually named after that flower. So it's very resilient, it's very tough, and we're trying to emulate that and get that deposit moved forward. We have just published a technical report on Terron, 43-101. We put it on our website yesterday, so anyone that's interested in reading about the property, it's a unique property. It's a very fascinating. I know nobody likes reading geology. It's just not it's not a pastime, normal pastime. It is for me, but you should read a little bit about this property because it's a one-of-a-kind situation. And we think we've made great progress on it recently. We've drilled 35 drill holes in the property, and they are all listed in the 43-101, and you should note the assays are in parts per million, and every drill hole has an interval of cesium in it. Now, we can't publish a resource yet because we have another issue, which I'll get into in a minute. But the way you have to look at those holes, we have 10 higher grade holes, and they're essentially islands in a large shallow ocean, or a large shallow sea, if you want to look at it that way. But they're going to give us the direction, so to speak, to drill holes, a quadrant of holes around each one of those, to increase the grade of the deposit, because that's where the high-grade zones are. We imagined when we first started working on this property that it could be, because there's cesium outcrops over a very large area. We've only drilled 10% of the property, and we imagined it was going to be one giant pit of cesium mineralization that would dominate its industry for some time. The chances are now that we're going to be looking at 9 or 10 or 12 smaller pits, and this is not unusual for gold deposits or epithermal deposits in general, because that's what this is. And you can mine those and build a mining company around the smaller pits, and that may be the case, but we still don't know the answer. We still don't know the extent of the pits, and that's what we're going to find out on the next round of drilling. So very exciting, and I should say that the company itself, we're heading into the most interesting period of the company's life. It's the most exciting exploration program in the company's history that we're coming up to in about 2 weeks. We're going to start, and that's on a program called Cerrita Este, which is a legitimate, very interesting, high sulfidation gold system that is that adjoins Taca Taca, the big first quantum porphyry deposit. It joins it to the west. We're going to be on that property with our 4 geologists and our field guys for 5 weeks. The budget for the property is about $350,000. It's going to take we're going to take about 3,500 samples off the property, and the purpose of the program is to define the size of the mineral system, the surface size of the mineral system, and we'll map every vein that's in there. There's a lot of veins, we believe, that are buried by various forms of erosion and aeolian winds. There's a lot of wind up there, so it moves the sand around quite a bit. So we're going to be doing some backhoe work to, uncover those zones that are between the veins, and we're going to sample them, take heavy mineral sampling, and rock geochemistry. It's got a chance to be a very excellent property. I've been in this business for over 40 years now, and I've seen a lot of properties. We've done a lot of work. We've worked in a whole bunch of different countries, and this is the most exciting property I've ever seen. The grade so far on the first 45 samples, it runs 9 grams a ton, and that's extremely high for any kind of a surface system, let alone a gold property. And we believe that we have that area about 200 meters east-west by 300 meters north-south, sort of underhand, so to speak, that we know that there's a high-grade system there. Now we want to work into the unknown, away from that system, and just do a huge program on the northeast and west side of the property.
Where exactly are your properties?
This property is in the Cerrita Taca Taca mountain range. It's beside Taca Taca itself, the big first quantum deposit. And if you go to the north west, it's 65 kilometers from Escondida. Okay, so that's a very large BHP copper mine. It's a fabulous deposit, and there's a few other big deposits in the same area. So we're in the right neighborhood. Taca Taca is not a standalone. We don't believe a standalone, once occurring porphyry system. They exist and form in clusters. We think that this high sulfidation system, gold rich, is sitting on top of one of the buried porphyries, and that there's a very good chance that it's similar to Taca Taca, only possibly higher in gold. It'll be a phenomenal discovery. That's the one property. Then to the south of Cerrita Este on the same property, there's a second one that has an equal chance. We haven't spent a lot of time on that, but we do have over-limit samples. Over-limit means greater than 10,000 parts per million, which is about 10 grams of gold, which is 10 grams of gold. And in our last assays, we had, I think, 36 of those, where they're all fire assayed, and the highest one was 42 and a half grams. And this is from a series of quartz, pyrite, and gold veins and vein arrays. And there's very little else in that system. There's not a lot of copper. And if this is a high sulfidation quartz system, it may leach. Copper is the enemy of leaching, surface leaching. And we think it's got a very good chance of producing. But we got to get there first. We got to do the work, get all of the quartz veins mapped, and we get the orientation, put in a couple of trenches across those systems, and then figure out where the drill holes are going to go. We expect to get that done within 5 weeks. After that, Jim, we're moving up to a property called Santa Rosa, which was originally an Argentina gold before it was taken over by Barrick. And nobody paid a lot of attention to it because it's in rugged country. And but there's exposed. We got that property in 2005. Same as Cerrita Este. We got that property in 2007, and no one else has owned it except us. Santa Rosa has had a few owners and a little bit of work done on it, but we've done the majority of the work recently. And it's a vein system, probably mesothermal, which means it's deep-seated, and it's got base metals and gold and silver in it. And it exists for a strike length of 7 kilometers. Intermittent areas of alteration showing where the mineralization is. What we have to do is trench across those alteration systems, see how big they are, and there's some very large areas in there that we believe are gold bearing, and this is right on surface. The assays are 3.2 grams of gold, and in an open pit setting, that's more than economic. So we're going to spend a lot of time in there. We need an excavator, something that's tracked, something with a lot of power, to trench across the alteration systems and between them to see if the veins exist between them, which we think they do. So it's an incredibly interesting property and very exciting, and to have 2 properties like this going under advanced exploration at this point. No drilling yet. There's been no drilling, and there's only been 1 trench on Ceres Estate. But to have both these properties moving forward at the same time is unbelievable for a junior company, and I am very excited about the upcoming results. We should have assays on Ceres Estate in a month or so, and then Santa Rosa is going to start after Ceres is done. So we got a back-to-back program. Total budget $650,000 US, and it's going to take us 7 weeks to do that. We will break for Christmas sometime in the first part of November, and Argentina basically parties for all of December and most of January. We'll be back in the field and probably in the 4th week of December. January, and carry on from there. Okay, so we've got a lot of work ahead of us here, but I've never seen 2 properties as good that in one company that both of them are going to get worked on. We've got an excellent team of geologists. They know exactly what they're doing. We had a meeting. Everybody's on the same page. We know exactly the exploration plan, and now we just have to get in the field and execute it. Very interesting, very exciting.
You've done some improvements as well in your investor relationships. Can you tell us about that?
Yeah, we've had a lot of discussion with our shareholders, our board itself, and everybody's thinking that we should do something with our investors relation program, which is basically non-existent. And we're reviewing several different opportunities. There's several ways we can do this, but I really want to choose the correct one. It's going to cost it's going to cost actually quite a bit of money to get this done. And historically, my own view is that you don't end up with an exit path based on an investor relations program. An exit path, I mean by that the program and what you're doing leads you to the investor, the company that's going to buy your property. The perfect exit path, of course, is getting a property, making it work, showing that it's economic, and getting taken out by a major company. That is the path that I've always been on. We've been close a couple of times, and now we're going to be, I think we're going to pull it off this time. That's the exit path that I've always looked for and always put all of the money in the ground. I realize now, though, that there is no retail component in the market. It's a very illiquid market, and we get a little bit of news, the stock runs up to 12 cents, and then 2 days later it's at 8 cents again. And frankly, I'm disappointed, but a lot of that's my problem, and I'm going to solve it and get the liquidity into the stock and to get some, value. We're not getting value for the company, and the program I hope we can come up with is something that will let a lot more people know about this company. This is the best property package in Argentina by a long shot, and nobody knows about it. So I'm taking that on as a responsibility to the company and to the board, and we're going to do something about that and get the stock more liquid so that everyone is going to feel better for sure when the stock is trading. And we're going to get a lot of people paying attention to it. They'll see the value because there's really no comparable to what we have in Argentina or anywhere else for that matter. We've got 26 properties. They're all phenomenal properties. And the other day I was going through the archives again, and I found our original business plan in the archives and our original staking. Now, that was in 2005, to 2004 and 2005, and it was possible at that time in Argentina to stake 10,000 hectares, which is a big piece of ground, and not pay any money for 5 years. So our business plan was to acquire as many large tracts of ground that had alteration on them. They didn't have to have mineralization, but alteration, showing that there's a heat source, which is what you're looking for, on the ground. And we ended up with 223,000 hectares. And every one of those properties, our geologists and prospectors walked them, took samples, and by one we eliminated them. And now we're down to 51,000 hectares from 223. And now you've got the core. We've got 4 core areas we're working in. They're all superb properties, and they've all got a chance to produce value for the company. And I just have to get that into the public domain and say, look, this is a great little company. Nobody knows about it. Come and give me a call. I will email anybody that wants our master list of properties or any other program or any other report they like. Just email me at bill@cascadero.com, and I will send you the information you're looking for. Because this is a unique opportunity with, I think, very, very high upside potential.
Bill, for new listeners, can you give us a bit of background about Cascadero?
Cascadero, yeah, you bet. It was formed as a subsidiary of Stealth Minerals, which was a company that I was the CEO of from 2002 until very recently. And Stealth basically did something similar to what we did in Argentina, or maybe the other way around. Stealth staked an area in British Columbia called the Toodoggone Volcanic Arc. And that's now the home of a whole bunch of very interesting properties. We did property scale, district scale, I should say, geochemistry, had a bunch of co-op students. We built a 50-man camp in the Toodoggone right on the Finley River, 2 helicopters and 22 kids and a bunch of geologists. And we took, 20,000 samples that summer and broke the back of the Toodoggone with respect to geochemistry and the alteration signature that these deposits have. Those properties are now in the hands of the larger company. Hunter Dickinson just acquired from us the remaining part of the Toodoggone Arc that we owned. Cascadero bought it from Stealth. Cascadero was formed as a copper porphyry exploration company, and we still have a couple of properties in Argentina, but it was not a design to have a copper porphyry. We wanted to go after gold and high sulfidation systems. So Cascadero has been in this business for a long time. The reason the Argentine business, I also designed the Argentine business and was the founder of that business, was because we had a great team of geologists. And summertime was fine for the Toodoggone. You might get 5 months work done. But the end of start of the winter is not a nice place to be, so you don't have a news source to maintain the company for the winter. So we formed an Argentine company. I did a deal with a partner of mine, a good friend, who had a geochemical database, and we got together, spent some money, and started the properties. And we were able to keep the guys that know what they're doing, the team, working. In the winter in BC, and in the summer in BC they were working. In the winter in BC they were in Argentina in the summer. So it's worked out fantastically well. And we now have, as I said, we're down to a core group of properties that have been through many geochemical programs, and they've been truthed a little bit. Now we got to get to the drill program, because that's the only way you can create value in a property. That's the expensive part, but it's absolutely necessary. We expect to drill 3 to Este and Santa Rosa and finish off Turon with respect to some infill drilling around the high-grade holes that we know are there, and increase the grade of the deposit, which is necessary now. I should say that there's a sophisticated, innovative metallurgical program going on at UBC, We're making progress there. The purpose of that is to reduce the reagent cost of the leaching system. And if we can do that, it will make very low-grade cesium mineralization economic. That's what we have to do to assure we can publish a resource that everybody can rely on. And that'll give the company it's a significant value to the company. The cesium industry, if you're interested in reading something that's very fascinating, is in chaos right now. There are two companies that have controlled this market for 25 years. Both of their mines are out of ore, and there's no resource, cesium resource on the planet except Turon that has been found in the last 25 years. So we need to get in there. We have to do some more work. We got to maybe double or triple the size of the resource, and those companies have no way to replace the reserves. And so I think there's going to be someone's going to blink here fairly soon, and we're going to get a partner having a view, looking at what we've done, what we're doing, and the potential of Turon. So I'm very excited about that as well.
Bill, where is Cascadero traded, and under what symbols?
Cascadero is traded under the symbol of Charlie Delta, CCD, on the Toronto's Venture Exchange. It trades in the range of, recently of 8 to 14 cents. It's currently this morning, I think it closed at 8.5 cents. And I believe it's a super bargain. We just exercised a lot of our options, and I'm going to do some more. I'm increasing my position in the company, and I really think it's going to do well.
Bill, maybe remind us again about your website.
The website is Cascadero.com, and it'll show you a picture of the Cavar volcano. It's a fantastic shot, and the piles of dirt in front of it are excavations from the Turon trenches. And it's just a magical photograph that I took of the property. It was a perfect day, and that brings back huge memories, and I'm glad we got it on our webpage now. So if you want any information, give me a call, 604-924-5504, or my email, bill@cascadero.com. I'd be more than happy to send you information.
Bill, thanks for the update.
Okay, Jim, take care and have a good time.
We've been speaking with Bill McWilliam, chairman of Cascadero. We were speaking on September 20th. I'm Jim Goddard.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated. Welcome to Company Showcase, an advertising feature on HowStreet.com.
I'm Jim Goddard. We're speaking with Larry Reaugh, CEO and President of American Manganese. He's speaking to us from Lisbon, Portugal. Larry, what are you doing in Lisbon?
We were invited to present our technology on recycling batteries here at the recycling show. And so we're at the Sheraton. And it's going very well for us, Jim. It's been an exciting show. Norm did the presentation at 2 o'clock this afternoon, and we had the majority. There was a couple of other recycling companies that were also doing a presentation. But I think they liked what they heard because Norm was deluged with several people coming up and wanted to know more about the recycling situation that we have on the go. And then later on, going up to the work area where the coffee was, again, there was a lot more interest. So, it just shows that people are starting to pay attention.
What was your presentation all about, Larry?
It was about our process. Norm Chow is the president and CEO of Cometco, and I have him do these presentations so that we don't let anything slip that's going to go into our patent. And so this is a third presentation that he's done for us, and this is the first time we've had this many questions. And like I said, there's a lot of recycling. There's a couple hundred people. We were a full house on the show, and I was very encouraged about it. And we had meetings here that set up before we came, and then we had a few meetings after that discussing things with people. I can't say that anything's going to happen immediately, but it certainly is a change in the attitude. When we were at NatBat, it was maybe a couple of questions, and when we were at the Cobalt Institute, there was maybe a couple of questions here. There was from the floor, there was about a dozen questions. And then all the questions that came up with the people afterwards. So I couldn't be more excited, and we're learning a lot about just what the feelings are about lithium-ion batteries, because I'll be honest with you, the recycling companies that are here recycle everything. And very few of them recycle batteries, and most of that is done by burning. But the underlying theme was on the batteries, lithium-ion batteries, and the scarcity of metals, and all the other things that are prone to that industry. So here we are. We come out here. We're thinking we're going to be talking mostly about recycling, and that people will be talking about recycling, like I say, copper or whatever their recycling activities were. And here we are listening to most of the talks are centered around lithium-ion batteries.
Well, Larry, as you know, Europe plans to phase out the use of oil to power vehicles in about 20 years. That's great news for your company, right?
Well, that's fantastic news. As a matter of fact, we even got to drive a BMW, a new one that they were allowing people to participate in the show. So Norm and I went for a spin in one, and it's a great experience. It's driving that BMW around Lisbon and back. So these electric cars are astounding. They got lots of zip, they got lots of power, and that quiet motor, just like you're sitting in the living room when you're driving around.
Larry, for new listeners, can you maybe explain what American Manganese does and what it proposes to do?
Well, American Manganese is proposing to commercialize a recycling opportunity that we have, and we've taken this from previous technology that we had on the manganese, which we have patented, and now this update that I'm giving you is showing me that we're in the right place at the right time, and I still believe that we are the most advanced one out there. And, listening to everybody else, still the major way of recycling the batteries is pyro, or, through smelters. And I can't tell you that I'm not impressed with this recycling show, and I'm not impressed with the attitude that's come out of it. So, but I kind of lost the theme that I was going on to. But American Manganese, a critical metal company that is focused on recycling lithium-ion batteries, the cathode materials from lithium-ion batteries, and we are well advanced. We've got 100% of the material back, and a little more about it. We're listed on the TSX Venture Exchange under AMY, and we're listed on the U.S. Exchange under the symbol AMY-ZF, and we are listed in Frankfurt under the symbol 2AM. And we can be contacted through our website, which is AmericanManganeseInc.com, or contact me directly at 778-574-4444, or my emails. I always get back to everybody on my emails, and at LREAUGH at AMYMN.com.
Larry, enjoy some of that famous sangria.
Well, we're going to spend a day here looking around the city, and I have to tell you, it's a beautiful city. And, you know, a lot of old architecture, a lot of old buildings and everything. And, but, you know, we haven't had a chance to really get out and look at it, you know, for a little zip around and dinner on an old castle last night. But, so we haven't taken in the sites yet, but we plan to do that on Saturday.
Larry, thanks for the update.
Okay, you're welcome, Jim.
We've been speaking with Larry Reaugh, CEO and President of American Manganese. He's in Lisbon, Portugal as we speak. We were talking on September 21st. I'm Jim Goddard.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.